Hello and welcome to the market update for Tuesday, May the 10th. Apologize for those that will be viewing this on the recording. Last week I had mentioned that I was going to be out of town this week and I was going to have to do this as a recording instead of a live class, but my trip was canceled at the last minute, so I'm doing it live. So I apologize for those of you that aren't here that were wanting to have a live class this week, but are viewing the recording. But anyway, I don't think it's going to be that big of a deal because although we'll go through the charts and everything and get you updated on kind of what I feel is going on, I don't think I'm going to be recommending any trades right now with the way the market is acting, and so we're still kind of in a wait and see type environment. Before I get into the update, though, if you have any questions that I don't get to in class or during the week, make sure you send those to jerry@traderspro.com, and I'll be happy to answer those for you. Now, I had mentioned last week that as the market starts selling off, that we'll start to see this bull market, bear market, long-term signal start to change, and it has. We're down to the number one. We'd been at a 5 for a long period of time. You can see we're in that incredibly unusual bull market phase that lasted for a few years here. And it took coming all the way down into this range right here, which is the normal range. This is the normal extreme down here. This would be an extreme bull market down here. We're very extreme for most of those years with how fast we rose. It's never happened that I know of that rapidly. Well, we had the sharpest decline that's ever happened with the COVID outbreak. The markets dropped faster than they've ever dropped before. And then we had a rebound and rally that was stronger than we've ever seen before. So it's important you understand that because it's happening now, and especially if you're brand new to trading, you're assuming that that's normal or that you're experiencing an environment that is extremely abnormal is what I'm trying to say. And so it's going to be difficult as the markets start to normalize, and I use that term. I shouldn't even use that term when describing the markets because the markets are never normal. They're always irrational. They're always in situations where they don't make sense. But that's what makes a market is that the market has to have uncertainty in it in order to be a market. If you could know exactly what the market was going to do, then you wouldn't have a market, because if there are enough people knew exactly what the market was going to do, then if everyone knows when to buy and everyone knows when to sell, you don't have a market. The uncertainty is what creates those movements, the up and down movements, and so you have to embrace the uncertainty if you're getting into the markets. If you're getting into the markets looking for certainty, looking for normalcy, looking for order, consistency, you're gonna end up in the nut house, because it's never that way. You have to embrace it. You have to embrace, and it goes for, I've mentioned this a number of times, it goes with software programs or gurus that you're following. If you're expecting them to always be right or the software to always be right, it's never going to always be right. The fact that that's what makes a marketplace is the uncertainty, and the market will inject uncertainty, especially at times when people feel like they know what's going on. And we're kind of getting to that phase here. I'm going to address that here with this sell-off that we've been experiencing, and kind of why we're seeing some of what we're seeing. I'll address that here in just a second. But so the long-term indicator, we're at a 1 right now. I mentioned this a couple weeks ago that I don't think that we're going to be at a bottom until we get into that bear market territory on this long-term signal. There's another number of other things that I'm expecting as far as a bottom. I'll talk about here in just a second. But you can see that again, as far as we've dropped, we're not even in bear market territory according to the algorithm that we're using for this. There's other definitions of bull and bear market that you can use. That some people call it a bear market if the market's down a certain percentage from the high. So that makes it difficult sometimes because, some people will be calling it a bear market. Others are saying we're not in a bear market yet, depending on whatever their calculation is for a bull or bear market. But the bottom line is that we've had a big pullback here. We've been discussing, how do we know when it's done or when we're close to getting done? And I'll talk about that here in just a second. The other indicators, we're getting close. We're in the extreme range on momentum, but we've seen it get to the far left side of that extreme range before, and we're not there yet. So this leads me to believe that there could still be some more downside in this drop. But if we do get into that far left side, you have to look for maybe a bounce. Remember, last time the momentum got to the far left side right here, we did get a bounce in the market, attempted to rally just short. It was like a day or two, but it was enough to, or actually it whipsawed back and forth for a few days. That's what happened. But it was enough to alleviate that oversold condition. I think it moved back into the sell, barely into the sell range here. And the same thing could happen again. But we want to look to see what happens if we get to that far left side again. See if the market bounces, or if it does put in a bottom. The breadth indicator, same thing. We're entering into the extreme range, but we're not at the far left side of that. So we're not in that extreme range where you would expect some sort of a bounce to take place. The buy-sell ratios are pretty wide apart. That's at an extreme. This is unusual that you're going to get this far apart. Really, we're at a spot in the market basically where we could see a bottom pretty soon, but we really do need to have that kind of flush out sell-off that I keep talking about. And this sentiment indicator, again, we're still not down the extreme. We've been there before. We bounced, and so this is showing that there still could be some more downside to get to that extreme oversold level. But let's get to the charts here because I want to talk about the last couple of days. Watch list here. And again, you've heard me talk forever about this 410, 411 area here. And then this area right into here as well that we bounced off of. And, we finally broke below that yesterday. Well, Friday we traded below it. And then again, it's not a coincidence that that's where the market closed on Friday, came all the way back up. But look that's an indecision candle. So there's a big fight going on between buyers and sellers that day. Again, there's a lot of people that were looking at this as a potential bottom. I keep talking over and over about the buyers that have come in at this level before. And so it's not surprising, again, that they pushed it back up on this day right here, pushed it back up into that range. Friday, they managed to push it off the lows. Yesterday, though, we finally closed below that range. Now, what I've been talking about is that panic is going to kick in as soon as we break that level, because that's where all the buyers are. And once we break below that level, they're going to panic and get out. But they didn't. I was watching the market yesterday, and we did not see a panic sell-off yesterday. As much as we were down, and that was a pretty big drop. You got to remember, we closed up here on Friday, so we gapped down at the open, and then we dropped even further yesterday. But it was orderly. It just kind of steadily dropped. Actually, it didn't even steadily drop throughout the day. It would drop, and then it would attempt to rally up a little bit, and then it would drop, and then attempt to rally up a little bit. It just kind of in an orderly fashion move down, and it did move down quite a bit the last hour, or last half hour in particular, but it did come off the lows of that last half hour as well. So there just wasn't any panic selling going on. It was orderly selling. And again, we want to see that panic selling. So today I was wondering, okay, are we going to, that close may be very uncertain, because either we were going to gap down and today and get that panic today, and again, we still could, there's still time, but it's not looking like there's any panic selling going on today either, or we were going to attempt to bounce or rally today. But even then, I don't expect any sort of a rally to last in this environment. So I'm not trying to buy any stocks or buy any call options or anything like that. Trying to play a bounce, I think that's too dangerous. You have to time it perfectly, time the entry and exit perfectly. But I also don't want to try to short the market right here, because when it bounces, it could bounce for a few days. It can try to rally for a couple days or so, and you don't want to get caught in that. So I'm still at a point right here where I'm just kind of waiting. I'm waiting for that sell-off. Now, one thing that concerns me, you hear me talk about all the time about the trading crowd, quote unquote. We're all part of the trading crowd. You can't ever deny that. As much as I know about human nature, and especially human nature as it relates to trading, I still get caught up with the fear and greed that everybody else gets caught up in trading. And so we try not to be part of the trading crowd or follow I don't know. Here's the funny thing is that as trend traders, we are trying to follow the crowd. We just don't want to be following the crowd at extremes, because at extremes, the crowd is usually wrong. In the middle, they're usually right. So we want to follow the trend or follow the crowd until they get too extreme. They get too bullish or they get too bearish. That's when these reversals can take place. And I talked about this panic sell-off that typically bottoms happen when you get this flush, or people, the attitude at a market bottom is that people are afraid to buy. They don't know how much further we're going to drop. They wonder when it's going to end. And one of the things that's concerned me a lot lately is that there's a lot of people that are waiting for this flush sell-off. And it's to be expected. I mean, it happens all the time where you get this panic sell-off, and that's usually where the bottom is. And there's anyone that's been trading for a long period of time knows this. It's not like the stuff I've been telling you is top secret. Nobody else is aware of these things that happen. But there's too many people that are kind of waiting for that sell-off and waiting for that panic, that it concerns me that it may not happen, or maybe it's got to drop a lot further from here before it happens. Because again, the market will do things that are irrational. It'll if too many people are waiting for a flush sell-off, then it may not have one, or it may have 3 or 4 of them or something, where you get the flush sell-off and you say, okay, this is it. That's the bottom. You start buying, and then it flushes some more. It goes down even further, and you look at individual stocks, you're like, how much further can some of these stocks go down? It might be one of those where it really creates havoc on the market. The bottom line is that I do know that a good side of a bottom is that you're afraid to buy, and I just don't see people afraid to buy just yet. Or wondering how much further it's going to drop. And in fact, a lot of people have said, well, this is the bottom right here, and they're confident that's the bottom. Well, again, if you're confident it's the bottom, it's probably not the bottom. So the bottom line is that, again, we finally got this close below this key area here, but we're just not seeing the panic that I was expecting. I'll show you on the VIX at a minimum that I would look for to start talking about a market bottom. We need to spike up above the previous levels that we hit on these lows back in January and February. we need to get above those levels, because these, we're below the market is below these levels, but the VIX didn't go above those levels, which means the fear right now isn't greater than what it was back in these areas right here. And you got to see that if we're going lower and the VIX isn't above these areas, we're not at the bottom yet. And so we're still waiting, and I know it's frustrating because a lot of you have been following this. If you've been following it for the last couple months, we've just been mostly in cash. We're waiting for this bottom to happen so we can jump back in and ride these stocks back up. But the good news is we're getting close. We're closer to the bottom than we are the top, at least in my opinion. And the patience that you're using right now and discipline you're using right now is going to pay off, because you're going to be able to get in these moves, and then class is going to be boring because we're fully deployed in the portfolio, and we're just riding these trends up. We're just making money every day as these stocks trend up week after week after week. So, but because we didn't get destroyed on the way down, we're going to be able to do that. We're going to be able to deploy that money and ride that trend up when it eventually happens. Now, again, I'm not trying to imply that I can know exactly where the bottom is, and I need to be clear on that. I'm not Nostradamus. I'm not psychic. But we want to be a little bit closer to it. We want to, once we kind of feel that feeling of afraid to get in, then even if it drops a little bit further, we're close to that bottom, and we can start to get into some of these beat down trends and ride them back up. All right, so today, I think the fact that we had that orderly sell-off today explains kind of what happened today. We gapped up today at the open. So here's where we closed yesterday. We gapped all the way up to here. We tried to rally a little bit. We dropped below to a lower low today, but recently we've been rallying back up off of those lows. The market went negative, and now it's gone positive. But this is something to watch going into the close. Although the S&P is up right now, and the Dow is up right now, and the NASDAQ is up right now, it's not higher than where it opened. Okay, so here's where we opened. We're still lower than where we opened, although higher than the day before. So if all you're looking at is the market up or down today, you're not seeing the whole picture. The fact that we're not trading above where we opened is a sign of weakness in the rally. And now I know some of you are saying, well, isn't this kind of creating kind of a hammer candlestick formation, which tends to be a little bit more bullish? The look of it is, but the context is something you've got to pay attention to. Usually these hammer formations are going to form below the day before. What I usually like to see is a gap down, and then maybe a tail that is created, and then the buyers push it back up and manage to close it higher than where it opened, still down from the day before, but you can see that the buyers are coming in. Now, sometimes you can form this inside the candle here. So here's where we closed the day before. We opened about that same spot right here, traded all the way down here, and then managed to close higher than where we opened. It did have a little bit of a push from that. But look at this one. This is all the way up there at the top of the candle where we opened, traded all the way down here. This is actually more of an indecision type movement today than the buyers are showing up, the buyers are strong. It's more of an indecision day, at least as of right now. Now, that could change going into the close. Maybe we surge and you have a big bullish candle at the end of the day. But the way it looks right now, especially as long as it stays within yesterday's candle, it's going to be it would mark to me an indecision day, which means it could go either way. And like I said earlier, that's the trouble right now is we've dropped enough where we could get a little bit of a bounce. Maybe we do bounce back up into that range again. Maybe we still are fighting to stay within this range. And by the way, it would make sense if we got a little bit of a rally right here, because what that could do, especially if we moved up into this range right here, is it would suck in people that believe that we are at the bottom. They say, okay, we're starting to move up now. I don't want to miss out. I've been waiting for this bottom. They're going to start jumping in, and that's going to be the point where it can roll over again and then flush those people out. That could create that panic sell-off. I talk about this a lot, but it's important to understand the psychology of these moves. What's going to cause someone to panic? Well, what causes panic is when you don't understand what's going on, or that what you thought was going to happen is suddenly changed. And I know, because I've panicked before. I'm part of the trading crowd. There are times where I am right there, part of the trading crowd. If I've got a lot of risk and suddenly the market does opposite of what I was convinced it was going to do, which it will do at times, it does it to everybody, I get into a panic mode where it's like, get me out. I got to get out. I don't care what the price is. I just want to get to the sidelines with as much capital as I can preserve. What could create that emotion? Well, again, if people are convinced if they're convinced this is the bottom and this is the flush out sell-off, which again, it didn't have the characteristics of that, in my opinion, and it starts to move up right here, they may go in heavy, and we might get a sharp rally like we did back in March, where it goes up consecutive days in a row, and maybe it brings us up into this area up in here. It's possible that it could suck people in thinking that's over, and then have that bigger drop. That's always the trick with this, is you don't know how it's going to play out. Now, this is one of the reasons why you see me kind of project some of the stuff. What if it does this, or could it do this? Because I want to be prepared for it. I don't want to be caught off guard if something like that happens, wondering, what's going on. I definitely don't want to be part of the crowd jumping in and buying aggressively here. Now, maybe I see some areas some sectors that are outperforming, that have good bullish trends, and maybe we jump into them with a tight stop. If it is going to last a few days, I'm not saying you can't, get into, because again, I'm not saying I'm always right. It could be that this is it. Maybe that is the bottom. We rally all the way back up. I don't want to, if the trend is showing that it's moving higher, I don't want to miss out on, miss it completely. I just don't want to be loading up just yet, because I'd still be worried that this is just sucking people in for another move down. And that's what happened here. I mean, look how many days we were up. We had consecutive days where we were up. Here was a down day, but it was the only one. And then when we broke that, we had some pretty big sell-offs within that. I could see something like that possibly taking place. But it's interesting that we just haven't seen that. The selling has been orderly, and so again, we're going to be a little bit suspicious here. And like I said, on Thursday we'll look at how things are playing out this week. I'm sure we'll have a little bit more of a movement there, up or down, that we can talk about and have a little bit clearer picture of what might be going on. But I just be careful. I wouldn't be, especially if you're listening to someone on TV, there could be a lot of people confident right now saying you should be buying. Again, I look at that differently. I look at that. I look at a lot of these people on TV. They're the ones that are trying to influence. If too many of these people sound bullish to me in this environment, again, that I just automatically don't trust it, because that usually means that we're not at the bottom. It's just the opposite. Maybe you have to experience it, especially if you watch CNBC all day long. When we do have a panic sell-off, you'll notice it, because you'll see nervous people on TV, and you'll see people that aren't saying with confidence, buy right here. They're saying they'll use words like you could start to nibble a little bit right here, or we might have a little bit further drop, or they might be wondering how much further they're going to drop. You'll just see a lot more uncertainty instead of these people coming on TV saying, this is it, I called it, jump in right here. That's when you start to get a little bit suspicious. And like I said, you might just need to experience it once, if you've never experienced it before, to kind of know what I'm talking about. but I kind of gauge market sentiment. I'm not really listening to what they're saying because I focus more on the charts anyway, but I listen to their mannerisms or their, do they appear like they're overly confident? And this is definitely an environment where I wouldn't expect that if we're at a bottom, you're not going to see them overly confident. All right. Dow, all these other charts are about the same. Although the Dow, it's interesting to point out that it hasn't closed below that key February low yet. It traded below it today, but it didn't. It traded a little bit below it yesterday, but it hasn't closed below it. Maybe it's those larger companies that need to break that support level for the market to really get into panic mode. The Qs are almost positive today. In fact, these are a little bit delayed, so the Qs might already be positive, higher than where they opened, in other words. But again, look at the trading range from yesterday. We really need to get out of that trading range to, as it sits right now. This is still kind of an indecision day, in my opinion. But in a rally, I would expect the NASDAQ to outperform just because tech tends to be a leadership group. And if we are going to rally for a few days, I would expect the NASDAQ to kind of lead the way in that. And even the small caps. Let's take a look at the Russell 2000. Yeah, these are kind of an indecision day here. Let me go back to the S&P because we need to also start looking at the kind of the next support area. We might have to go to a one-year chart here to see. Ooh, we might have to go further than that. Let's go to a two-year chart. So there's a lot of congestion right into here that could, now there is a little bit up where we're at right now as well. From these peaks right into here. Now I'm looking at the bottom of that range and then kind of resistance back in here. The problem with this saying, okay, well, this is the support, is it's just not acting. Again, we're not getting that panic selling that you would expect at a bottom. And so I'd look to see if maybe down here is where that would happen. Again, all we're doing right now is just kind of seeing where these levels are in case we do break below this. Now, one thing I did a couple weeks ago when I was talking about the expectation that we had further to drop was I said, this looks to me like it's forming a larger ABC correction. In order to get a solid ABC correction, wave C needs to go below the end of wave A, which we've already done that. And another measurement is that wave C will be about the same length as wave A. Let me use the highlighter here. And we're real close to that being the case as well. So it meets criteria where that's possible. This could be a bottom based on that. It's just not, again, we're just not getting the kind of psychological element of it that concerns me a little bit. And even then, you go back, you typically, you'll end up retracing about 50% of the moves. Stocks will tend to retrace about 50% of the moves. So you get a trend. And then when you get that ABC, a lot of times that ABC, when it ends, will have retraced that previous move by half. Now that's a rule of thumb. It can be a little bit shorter than 50%. It can be a little bit longer than 50%. But generally, you expect the retracement to be about 50% of the move. Well, again, you take this whole move up, we're not at 50%. 50% is down closer to this level right here. I don't even know if that is exactly where 50% is, because I'd have to go back further to see where the start of that that trend is. But I do know that this is just this, so far it's just a shallow retracement of that whole trend. Now, like I said, this rally from those COVID lows was so unusual that typically when you're going to correct that, you would expect that you're going to correct a good portion of that. You're not usually going to expect that you're going to have just a real shallow retracement of that unusual move. So I do think that we probably need to see a little bit deeper move here. And again, this could take a while. I mean, if you had this, I mean, we started this a couple months ago where we had this move and then we attempted to rally here. We dropped, further, attempted to rally here. It could be, another week or two or so to kind of, for this to kind of play out. But anyway, we just want to make sure we're kind of aware of the proportion of that. I'm just trying to eyeball a couple areas that where I think we could pull back to. I think maybe that 368, 370 area is one to kind of keep an eye on if we break these levels here. All right. There's a question about I could use the retracement tool. The problem is it's the lowest past 2 years, and we can try to go by the calendar here. Just takes sometimes sometimes it takes a little bit of time for this to load up when you're going back. Let's see if it'll load up here. So 50% is right about 350. So probably right at about in here would be about where that 50%. You can see we're not even at the minimum, the 38.2% area. And down here would be a deeper, there's some support down here at the 618. That'd be a really big sell. But at that point, you'd have a wave C that's way longer than wave A, and that's usually pretty rare. So I'd say this is a decent area right here, about 350 to look at, although that's where the retracement level is. I'd look at these other support areas as they kind of coincide with that. And we can take a look at those when it gets a little bit closer to that. All right. All right, bonds are bouncing a little bit today, but again, it looks like the normal bounce within the downtrend. You really need to get up above this high right here to be wondering, and especially in a kind of an impulsive way, moving up several days to really start to signal a trend reversal. I don't see that yet. This just looks like a bounce within the downtrend, expecting bonds to continue to trend lower. Gold is still moving down. It's possible that gold is forming an ABC pattern, although the retracement is getting pretty deep from this move up right through here. But with the price action right now, it's not showing any sort of bullish reversal right now. So I'm assuming it's going to continue to move down until I see something that could change that. But it looks like it's still trending lower. It's not at an extreme level yet, so we're in the extreme reversal risk area. We're not the far left side, and it doesn't have to get there. It's in an area where it is oversold, so maybe it does find some support right here and starts to rally back up. But the current trend in gold is considered down. Oil has dropped a little bit the last couple of days, and I do have an oil trade in the portfolio. I'm still I have the USO. I think my stop is down below here, but we have this triangle formation that we had broken out above right here, and now we're with today's move, we're getting to the support of that triangle formation. If we overall, this is a sideways move through here. If we start breaking below that, if we get down below this low right here, that would be pretty bearish for oil. But I don't think it's going to happen because typically tops don't form like this. I call these the volcano tops. They're rare. Typically, they tend to be more pointy. So when you're trending up, you'll tend to kind of peak out and then reverse. Rarely do you see a stock. It can happen, but it's pretty rare where you see it move sideways like this and then fall. Like I said, I call those volcano tops because they look like the top of the typical illustration of a volcano, kind of the round top of a mountain. And so if this drops right here, you'd have more of that volcano top look to it. Now, all you need is a breakout and a reversal. So it could be that we break out of this and then reverse, and that's enough to alleviate that volcano top, and you do have your pointy top right here. So just because you have this long sideways move doesn't mean the stock has to break out and take off for another big move. It could just be a short breakout and reversal. So I would expect that we'll find some support at some point. I have my stop down below this area right here, I believe. I'll have to double check that, but I think it's right below this area right here. Maybe it's below here, but I'll have to look at it. But I would think that we'd find some support in this area and start working our way back up again. But as of right now, the trend is sideways. It's clearly sideways, the back and forth the last couple weeks. Last couple months. The dollar continues to rise, where it looks like it's about to break out. It's paused right in through here. I talked about that when it pulled back. It's probably just a pullback within the uptrend. It looks like that's still the case, although we haven't broken out yet. So could it still bounce sideways for a little bit? That's definitely possible. But the overall trend is up. It just looks like we're in a correction of that uptrend. And the VIX, this is something you can keep an eye on here. So this is these are the spikes. This was that February spike right here. There was a spike back in December that was up here. We got to get above those levels. In fact, let me go to a bigger chart here. We'll go to a one-year chart. You can see those a little bit better. We need to get above those levels to even really be talking about a market bottom. So, I mean, we look at the last couple of days here. Let me zoom back in again. So we did have an update yesterday with the market going down, but again, there wasn't just this really big spike that it was just orderly. Like I said, the selling was orderly. The VIX didn't spike in a big way where you're like, oh boy. Remember what the VIX is showing you is what's happening with the VIX is the VIX is showing you the change. You don't need to understand this if you're a little confused. The VIX is measuring the change in the implied volatility of the S&P 500 index options. Now, you have to really understand options to understand what implied volatility is and why that's significant. I'm not going to get into that today. But what happens is basically when the professional traders use put options to hedge their trades. So what will happen is that the put options will go up in value when their stocks go down in value. And so instead of selling all their stocks, which they could do, but that creates a that creates the market going down. If everyone's selling, it really pushes things down quickly. And so if they're selling their shares, they can't get out of them fast enough when everyone else is selling, and they lose tons of money when that happens. So a lot of times what they'll do is they'll quickly go buy put options on those stocks, and those put options will go up in value when their stocks are going down in value. So now they can sell their stocks as fast as they want because they're offsetting the losses with those put options. So their stocks are dropping, $10 million in value, but their put options are going up 10 million in value, or not necessarily equally, but let's say their put options go up 8 million in value. They've offset. They're only taking a $2 million hit instead of a $10 million hit. Okay, so they're hedging, they're protecting they're like insurance for their portfolio in a way. Okay, well, those options, when the market starts selling off, those options start to become more expensive. There's a part of the option price that is what's called implied volatility. Those market makers will increase the value of those options to hedge themselves against the uncertainty, because they don't know if the markets are going to drop suddenly and then rise real quickly, and they're going to be affected by that volatility. And so, let's say a put option on the SPY or the S&P 500 index was, let's say under normal conditions when everything's calm, let's say those options are $3 for one contract. And again, you don't need to understand all this, just understand the concept of being more expensive. Those same options, when the market becomes very volatile, could be almost double that. They could be $5 or $6 for the exact same protection. Okay. Now, if those professional traders are still willing to buy them at that price, it usually means that they're overpaying because they have to. They're in a panic mode. They've got to protect that portfolio, even if it's costing them more to do it. But they're not going to do it if they don't need it. If they don't feel like they need to protect it, they're not going to pay that additional price. So, in other words, what happened in the VIX yesterday, yesterday was those were going up in value. They were increasing in value, but they weren't going outrageous. They were steadily going up in value, meaning that those professional traders weren't panicking to buy them. They were buying them, but they weren't panicking to buy them. Does that make sense? At least that wasn't showing up on the VIX indicator. If it would have spiked up, that tells you that level of freaking out by those institutional traders is high. They're freaking out right now. They don't care what the price is. They're buying that protection to save their behinds. And that's just we're not seeing that yet. Okay. So, and we're not seeing that it proportionally, that level of freaking out should be higher. If this is the bottom, it should be higher than it was back in February and March. Now, a lot of times what you'll see is you'll see a big reversal too. You'll see a big panic spike. And then, so this was kind of a short-term bottom that took place. You saw the VIX spike from closing right here. It spiked all the way up to here and then reversed back down. This is that big bullish reversal day in February that we always talk about. So that there was right at the open, there was that level of freaking out. The buyers came in immediately, and so that implied volatility started dropping because the market was going up. Typically, the VIX is going to move opposite of the market. Well, it's almost always moving opposite of what the market is doing. But another way you can look at the VIX is it behaving abnormally compared to, is it like I said, is it spiking with the market dropping? That's telling you that they're freaking out. Or sometimes when you get in a bottoming situation, what will happen is that the market will go down and the VIX will go down. When they're going in the same direction, that tells me that those professional traders are no longer worried about protecting, or they've already protected their portfolio. They're not buying any more of those protected puts. And that usually can mark when you're at a bottom as well. As if you see the market move down, the VIX move down, it means that the professional traders aren't worried about it going down any lower. And that can be something you see in the VIX. It's a complex indicator. It's not always showing us something or telling us something, but it usually is very helpful when you're pairing it with these big volatile moves that are taking place, because it's giving you an insight as to what those big professional traders are thinking. I can't know specifically what Warren Buffett is doing in his portfolio, and I don't know who specifically is the one panicking, but it tells you collectively when because those professional traders are the main ones that are hedging using those index options. The average trader isn't going to go out and buy, 10,000 SPX put options to protect his portfolio, because he doesn't have that much money in his portfolio to protect. So this is showing us what the big traders are doing. And remember, this is important as trend traders because we're trying to follow those guys. So I need to kind of see in this case when they're panicking, when they're finally panicking and they don't care what the cost is for that protection, they're buying it. That tells me that we're getting close to that bottom. And like I said, the selling was orderly yesterday. The VIX moved up, but it wasn't spiking or surging in a huge way. So that's something that we're going to be looking for as well in the next little bit. Chip stocks, you'd want to see chip stocks outperforming the market. Now they are outperforming today, where it looks like they've gone positive. If we start to see chip stocks outperforming for a few days in a row and rallying, that could mean that the market is going to follow. But again, we didn't get that flush out panic sell off with the chip stocks either. So, but you can see all the way back here when what I was talking about before, how helpful it is to see them as a leading indicator. That's why we have them in the update. Is remember the chip stocks broke below that key support level before the market did. And what did I say back there? I said it doesn't have to happen immediately, but we got to. That was significant. That we went to a lower low in the chip stocks. The market wasn't at a lower low yet. But what happened over the course of the next few weeks? We ended up following what was going on there. Now, what I would look for is, okay, these are lower highs and lower lows. Do we start seeing the chip stocks rally to a higher high? That could tell me that maybe we're getting a bounce. And remember, we talked about how maybe the market could bounce. Maybe it could bounce pretty big here, have a March type move, where it rallied several days in March. Now that you can look at this and say, well, that's quite a ways away before we'd have maybe some confidence that the trend was changing. Yeah, that's what can happen when you're down this far. Is it could take a little while to get up there, which is why I'd still be suspicious of any bounce right in through here. I mean, like I said, we got a bounce through here, even got back above that previous low, and then reversed right back down again. It could just be a bounce right here that alleviates that oversold condition, and then heads lower again. That's something we'll keep an eye on. But both the chip stocks and here's the transports, again, they were signaling problems back in here, and now we're starting to see the market play out. And you watch to see if these are going in the opposite direction. That could maybe signal when maybe we're bottoming or near a bottom at that point too. Bitcoin's been falling apart too. Big, ugly day yesterday in Bitcoin, but that's not surprising. You heard me talk about, especially as we started to break or got down to this support level right here, it just looked like we were heading lower. And in fact, if you look at a longer term chart, you can see that was just, this looks like it was just that consolidation within the downtrend. So what's kind of going on too is that there's really not a safe place to be. Even, what have we been focused on in the portfolio? We've been focused on the oil stocks because they've been outperforming as the market's been dropping. But what's happened to oil? Oil's dropping right now. There's almost no place you can go that's rallying. That is what you start to see near market bottoms as well, is that people look around and they're like, there's nowhere I want to go. And especially if the market's moving quickly and they don't know where to go, again, what's the reaction? There's panic. There's just get me out then. I don't know where to go. I don't know where to put my money. Bonds are dropping. The market's dropping. Oil is dropping now. Bitcoin is dropping. You start to, it builds towards this crescendo moment where it's like, I got to get out. There's nowhere to go. And we're starting to see that here over this period of time. All right. Let's look at the S&P, if that's updated. Let me update this. Yeah, we're just kind of bouncing back and forth, and it's still kind of just an indecision day. So the portfolio, I did get out of ADM. I did stop out of that. My stop was below this low right here, and we dropped below that yesterday. Now, this is one that, again, this could be an ABC correction. I still think this is one that you want to keep an eye on because, especially as we get into we're just in the early stage of the growing seasons, and these are stocks that I don't think people realize. Ukraine was it like the third or fourth largest wheat producer in the world, and it shut down. I mean, it's completely shut down. I don't know how much reserves they had that they're working through, but there's going to have to be the rest of the world's going to have to make up for that demand, and so this is going to be an important growing season. And you think about it, any of this land that any farmers had that they weren't farming because they didn't need to, they're going to be using it. They're going to be jumping in and taking advantage of the higher prices. I know this stock has made a huge move already in anticipation of that, but I just don't see that ending just yet. Now, remember, markets are always forward-looking, so this stock rallied on the anticipation that would be the case, that demand, for commodities would increase. But I still think it's going to be there. I still think there's more of an uptrend still possible. I'm just not going to guess and just assume this is just a correction. It's going to go back up, which is why I stopped out where I had stopped out. But this is one that if it can go back, start moving back up again, if the market starts rallying, these are areas that we'd want to start jumping back into, along with some of the oil stocks. Again, what's really saving us is the SOXS semiconductor inverse ETF. Now, it's down a little bit today with those chip stocks rallying a little bit. Had a big spike up yesterday. I'm still going to be holding this just because I don't trust today's rally, and I want to make sure if it does continue to go higher that I'm still in this. But remember, these stocks I'm using as a hedge. I'm going to be jumping in and out of them without much. Again, I'm not looking for buy or sell signals on these. I'm just using these as to hedge against the decline if the market's going to continue to decline. So if it looks like the market could rally for a day or two, I might jump out of them. Because as much as they're making us when they're rallying, they can also give it back when they're dropping. And so if it looks like they're going to drop further, I might just jump out of them and jump back in. And if you don't know how to make that decision, or you could just go ahead and stay in them. What'll happen though is that is you'll just kind of be going back and forth. We have done a little bit of that where our individual stocks have gone up in value, but and then these are going down in value, and then when the market drops, those individual stocks drop in value, these go up in value, and so you're just kind of moving back. Your account's really not going anywhere, and that's okay too. I mean, in these sell-offs, you just want to avoid losing a ton of money. So if you're just putting these on just to make sure you're hedging what you're already in, and that's all you're concerned about, then you don't want to be jumping in and out of them. That's fine. Just kind of sit tight on those and let them kind of do their job there. But these have been saving us quite. In fact, they've been making us money on the declines. Let's go through the whole list here of the portfolio, and then we'll wrap things up. NOC, this is our defense stock. We're in kind of a sideways range right now. Down day yesterday, indecision day. I think, like I said, I think my stop's down below here. In fact, let's look at that here real quick. Yeah, 431. So we're not at the stop yet. We're currently at 452. USO, our stop's at $71. Stock's currently at 74. So we're still on all these. We're still not below the stop levels. So here's the USO. I think 70. Yeah, 71 is down below here. So stop's down below that. CEIX had a big drop. Again, this is a coal stock. Had a big drop yesterday. Indecision day today. We're still acting like an uptrend, so I'm gonna still stay in that. And then SOXS down a little bit today. SARK is down a little bit, even though it was actually positive. It was up above here when the market was selling off a little bit. Now this is getting into a little bit of the extreme reversal risk area. And we know that the market is close to getting oversold with its drop. And that's what I'm saying. It's possible we could have a little bit of a bounce here. So yeah, I was at about 111,000 earlier today, down to 110. But so it's kind of, it's just kind of back and forth. And so a lot of that is that with the market attempting to rally, but then these stocks are down or flat, we're seeing a little bit of a loss with these giving back a little bit. So I don't want to give back too much. If these aren't rallying with the market rally, then I don't want to be holding these where we're declining in value. So that's where I might jump in and out of those. And I'll see how we close today to make that decision. Now, I really don't want to go over a lot of individual stocks, but I know people tune in specifically for that. Here's one that definitely isn't ready to go right now, but it looks like it could be forming a bullish ABC pattern, so you maybe want to keep an eye on it. But under computer and technology, Box is a 94 strength rank down here. BOX is the ticker symbol. And it has a sell signal there. That's what I'm saying. You wouldn't want to be just jumping into this, but it could be that this is pulled back in a bullish ABC pattern right here. You'd want it to make sure it holds this higher low, because these are higher highs, higher lows through here. There was a higher high. You want to stay above here and go back to that buy signal as confirmation. This is one you could throw in a watch list, and if the market does start rallying from here, and you could look at that one as maybe one to jump into. I like the base it formed down here. If we look at a longer term chart, and this nice long base, that also makes this important down here, is because you'd want it to hold the resistance of that base. So it broke out, and then it's kind of come back and retested the breakout. It happens all the time. and then it could start taking off again. If it dips down back in here, you'd want to stay out of it because you don't know what it's doing. Remember, I said typically you have these long consolidations. They don't usually drop off of those because you'd have that volcano top. But I remember what I just said. It doesn't mean you couldn't break out of the range and then come right back down and actually have the trend. This could be the top. You're in a trend reversal, and this thing could come way down. Where would you know that you're in danger of that happening? Is if it breaks back into this zone right here. You probably want to be out of it. That's where I know I'd probably be wrong as far as this retesting the breakout and going higher. If it drops back into the zone. Now sometimes it'll dip into there. Because again, this is not what I'm not the only one that sees this. Anyone that knows how to read a chart is looking at the same type of area here. So sometimes what will happen is it'll throw everybody off. It'll dip into the zone, stop everyone out, and then it'll come back up again, give you that head fake. But that's why you'd want to wait for this to go back to a buy signal, because if it's still just dropping and it's going to play that game, you don't want to be part of that game. But if it does dip barely down in there and comes right back up, it'd probably get back to a buy signal somewhere in this area right here. And you'd probably have a little more confidence that it's going higher at that point. You'd look at this as a little bit of a head fake. All right, that's all I have. If you have any additional questions, make sure you send those to Jerry@traderspro.com. I'll answer those for you. Any other questions that you think of during the week. All right, have a great week. We'll see you on Thursday. For the stock-specific class, we may not have a lot of stocks to talk about. It may be a little bit more of just a market update class, especially if we are still selling off. But we'll do that on Thursday. Thanks, everyone. Have a great week. Bye now.